have a look at this, right? This is the Bitcoin treasury company balance plus the ETFs. So when we just look at the treasury company balance, we tend to continue to see accumulation, right? The Michael Saylors of this world continue to buy Bitcoin. Still, we saw Bitcoin dropping from 126K to our current levels. We also see how the Ethereum, or how the ETFs rather, don't necessarily sell, right? They simply keep their current balance. There is no net selling. There's maybe not that much buying in the last few months. But if you add both of those together, right, we look at the treasury companies plus the ETFs. So when we look at what's Wall Street in general doing, this is rather positive, right? So when we see Wall Street buying all the time, why is it even possible that Bitcoin can drop by 50%? Who is the marginal seller in this negative momentum over the last few weeks? It's obviously not Wall Street. The number of Bitcoin that's held by Wall Street tends to rather trend up. But somehow there is realized capital change that's negative. So in other words, people are realizing losses net. That's what this is showing. But who are those people? Because when we look at what the long-term holders are doing, so all the wallets that have held Bitcoin for at least half a year, they are actually accumulating since Bitcoin hit 87K roughly. They did sell quite a bit from 125K to 87K. But since we bottomed out at the end of last year, right, at the end of December of last year, the long-term holders tend to rather buy. So they are not necessarily realizing losses. So where is the selling pressure coming from? That's the big question. When we look at the value days destroyed metric, right? When we look at the dormant Bitcoin, basically, that's what value days destroyed is measuring. We look at the Bitcoin that haven't moved for several weeks, for several years potentially, and we look at the whales that have got a lot of Bitcoin, and we check at what has the dormant Bitcoin done. We see that there was very little activity in the last weeks, as in the dormant Bitcoin also did not get reactivated. That was not the reason why Bitcoin fell from 95K to close to 60K. So what triggered the sell-off, and why do we then suddenly see this turn around? And could we potentially see continued selling? If we don't know who's selling, right? If we don't know what's causing the further price decline since 87K, how can we then predict that we will continue to go down? I think I found an answer. I think I found the reason why we went further down. So this here is the short-term holder realized price. The short-term holders seem to not necessarily be selling, right? They are already in losses since we went below 113K. And short-term holders also don't necessarily like to realize losses, right? There tends to be more selling by the short-term holders when we are above the average cost basis. That's true for long-term holders, that's true for short-term holders. It doesn't seem to be justified that it's short-term holder selling. It doesn't seem to be justified that it's long-term holder selling. Yet, during bear markets, we tended to fall below the long-term holder realized price. So what's going to push Bitcoin down to, say, 41K? At the bottom of a bear market, tended to turn around below the long-term holder realized price. So that would be the most straightforward prediction here as well, right? We might be falling again. If we've already entered the bear market, we might be falling again below the long-term holder realized price. The average long-term holder needs to be in losses in order for the bear market momentum to turn around. That's a straightforward thesis here, right? When we look at charts like this seems to be the obvious case. But who is selling here? Check this out. We've got the hash rate by the miners. That, interestingly enough, it did go down since Bitcoin hit 92K, roughly. So it seems to have been some selling by miners that capitulated. We see how the difficulty is going up all the time, right? The long-term trend is that it's getting harder and harder to mine Bitcoin. There's more and more competition. Hash rate is becoming cheaper and cheaper. And so this simply means that the mining business is getting tougher and tougher. And so when the Bitcoin price isn't appreciating as quickly as it used to, and the difficulty continues to go up, some people have to potentially turn off their mining. And that's then when enough miners turn off their mining operations, when the difficulty goes down. And that could be a potential reason why we continue to sell off. So some miners might have sold even when the long-term holders didn't sell, even when some long-term holders even bought. So miners are realizing some losses. That's one explanation. There's another explanation, and that's leverage. Have a look at the open interest. So this is now how much Bitcoin bets are currently made with leverage. When open interest tends to go down, there tends to also be less hedging activities by the market makers. There is positive correlation between open interest, so the amount of bets on the price, and the spot price itself. That's very visible with many small altcoins. It's also visible in the general macro. And what I find interesting is that open interest peaked at the 10th of October. And then afterwards came the flash crash, right? Many altcoins went down massively. But since that flash crash, right? Since the 10th of October, the open interest for Bitcoin continues to fall even further. There is no bottom here. The open interest is now at very similar levels to where the Bitcoin price was at the same time, right? So if the open interest continues to have negative momentum, if there's less and less short-term speculation on Bitcoin, if it's not just the short-term spot holders, but also the short-term derivative traders that are currently exiting the market. And then there is a good chance we continue to fall below the long-term holder realized price. So this is simply just a deflation of leverage. It's a combination of miners selling that could potentially push the price further down, plus a deleveraging through the perpetual futures. I don't think that the long-term holders will continue to sell here. I think that many short-term spot holders are already in losses. But really, the short-term holders that trade with perpetual futures, they might still exit. They might have a positive bias and they might get wrecked with every little sell-off. They are a potential source of selling, and so are the miners. And plus the general momentum, right? Plus us being below the moving averages. All of those data points point towards, at least over the next months, to continue to see further selling. Of course, when we look at the drawdown, right? The drawdown from the all-time high. We've already looked at this in the prior videos, but check this out. In the past, during bear markets, we tended to fall somewhere between 85 and 75%. And we could make the argument that maybe the bear markets get a bit less severe over time, as the bull markets tend to make us less and less money, right? So there is decreased volatility on both ends. We tend to go up less, but maybe we also tend to crash a bit less from bear market to bear market. But when we look at the degree to how much we tend to crash less, indicated by this support line here, still our expectation should be that Bitcoin could fall 72% or so from the all-time high. Maybe we turn around even a bit earlier, so it probably doesn't make sense to wait all the way to 72%. Maybe we should already start buying at, say, 65% or so, but we aren't at 65% yet. If we look at the all-time high and we measure 65% below that highest price, where does this bring us? The answer is to somewhere around $44,000. So it's interesting, right, how those numbers align. When we look at the long-term holder cost base, when we look at the drawdown from top to bottom, when we take, say, the 72 mark, right, 72% mark, what's most realistic based on prior bear markets, we could fall all the way to 35K. So those are the kind of ranges where I will start buying Bitcoin. At 65% below the all-time high, between 65 to 72% below the all-time high. Those are the kinds of levels that I feel comfortable with. Yes, is there the quote-unquote risk when we currently bet on falling prices, that we've actually bottomed, that we could see another rally? There's always a scenario somewhere that we could argue with, right? We had once a turnaround from the all-time high when we actually already kind of entered the bear market, where we then reached another all-time high. So here at the second half of 2021, we dropped by roughly 50% to then just generate a new all-time high. This is not the regular pattern. Usually when we hit an all-time high and we enter a bear market, we tend to fall much more. We had one instance where this was not true. And the explanation for that is that Bitcoin was bought a lot by the institutions during that rally. So Michael Saylor was advertising Bitcoin as an institutional asset, and more companies started buying Bitcoin. And when we actually look at the on-chain data during that rally, it did not go up. Prior, right? So when we just look at the bull market since COVID, we saw all kinds of on-chain metrics going up. So the number of active addresses went up, the number of transactions went up, all of that went up. There was more activity, there was more views on crypto content as well. That actually peaked in April of 2021. It did not peak in, say, October or November of 2021. This secondary rally was not created by the masses buying Bitcoin. The attention on crypto was already going down even during that price appreciation. This was all just institutions buying in. And then the institutional buying power slowed down, and then the real bear market came. So I do not regard the October peak in 2021 as the actual bull market peak. I think crypto already peaked in March and April of 2021. And so because of that, because I don't really regard this as a true rally anyways, and because even when we hit the all-time high, we didn't continue the rally much more, I don't really think that this is a very likely scenario to repeat itself. I think it's much more likely that, we continue to our regular pattern, that we will fall all the way down to potentially 72% below the all-time high. That's my base case, and there is also an explanation of who might be selling here, right? The miners that continue to accumulate and the leveraged traders that use perpetual futures. And then, of course, arbitrage bots will balance out the reduced leverage in the market with the spot market as well. The spot price will go down when less people are betting on crypto as a whole. The market is doing extremely well today. Bitcoin is up more than 10% in the last 24 hours, while the altcoin market is doing even better than that. The question is this potentially the turnaround? We have seen all of that sell off from the all-time high, more than 120K in Bitcoin. Now we are down. And so what's going on here? This is Bitcoin in US dollars, and we bottomed out at 62K. We went up all the way to 69K, an appreciation of more than 10%. Is this the turnaround? When we zoom out a little bit, this is Bitcoin with the best moving averages. We are still rather in a trading range. So even though today was impressive, even though today we have appreciated a lot, in the grand scheme of things, it doesn't really look like the momentum has already turned around. The moving averages is an approach to time the medium-term trend, right? Whenever we are above those moving averages, we should be betting on rising prices. When we are below, we should be betting on falling prices. And still, we are below both of those moving averages. The line in turquoise, that's the best moving average, the 125-day, if we just use the spot market. So if we just buy and sell Bitcoin, we don't bet on falling prices. If we don't want to be too active with our trading, reduce trading fees, the 125-day simple moving average is the best. If we trade more actively and we've got lower transaction fees because we might use perpetual futures and because we might use some leverage and because we might bet on falling prices every now and then the line in orange, the 44-day simple moving average, is the best. Still, even though that's a more active of the two moving averages, we are below that level now, which is currently at 78K. So even a very quick rally like this is not enough to turn around the general momentum, if of course history is an indication. What I find interesting about the current rally is that Ethereum, as a levered version, quote unquote, on Bitcoin, right, it tends to have more volatility than Bitcoin, outperformed, right? So the Ethereum dominance did go up as expected. However, the Ethereum dominance itself is also still within a trading range. This is the trading range that was established at the beginning of February, and we are rather trending down on that range. If we zoom out a bit further, then the situation looks even worse. This is now on the daily chart, the Ethereum dominance on a daily chart. Overall, the trend is down. This is the medium-term trend established at the beginning of February. And there's now two potential scenarios. Either we continue to bounce a bit further, we go up to the upper end of the range, and then we sell off, or we sell off instantly. Those are the two possible scenarios. There is a good chance that actually Ethereum dominance will rise a bit further, given that there is still space for Bitcoin itself to rise further, right? We could very easily appreciate by another 10%. We could reach the 76K mark and then sell off, and we'd still be in a healthy bear market. So really, it's just a matter of time horizon. How long do we want to hold a certain position? If we trade the minutes, if we trade the hours, then of course we should take advantage of a rally like this. But if we don't trade that actively because we want to reduce trading fees, because our market edge might not be justifying trading in and out of the market several times a day. If you just want to have a position and keep this for a bit longer, then still the bear market seems to be intact. This is just a counter rally. It's a counter rally versus a very massive quick sell-off that we've seen over the last months. So when day after day we see selling, that at some point people might get short exposed in aggregate, and that then maybe market makers start to liquidate those shorts, that's not necessarily a surprise. A rally like this is very much within expectation. There's nothing wrong with this. Not necessarily that our general thesis, our general bear market thesis is wrong. Now, let's pick something here, right? The top performers today is Polkadot. It's 35% up. And I've checked already AI, is there anything really specific going on about Polkadot? I couldn't find anything. This is the dot chart in US dollars. And yes, this is impressive, right? 35% if you pick the bottom over here. If you pick the bottom on the 24th of February, we're even up 37%. So this is impressive. However, I always like to look at relative valuations, right? This is just the US dollar chart, and I always like to zoom out as well to get the macro picture. So when we look at Polkadot in this example versus the general altcoin market, and we don't look at the hourly time frame, we actually look at the daily time frame, the picture looks very, very different. This is DOT relative to the others market cap. So the others market cap is all the altcoins that are not in the top 10. And we just compare those two, right? Polkadot, very long term, tended to just underperform. It tended to get sold off every now and then. And check this, right? So we get these kind of rallies. We get here a 47% rally. We get here a 34% rally. And in Polkadot, since May of last year, maybe because of this long-term bearish trend, we tended to sell off a bit quicker. Right? The selling was from the top of the trend channel to the bottom, and this is just a strong correction of that very quick sell-off. So even the best performing cryptocurrency today in the top 100, Polkadot, it's just a short-term bounce. In the grand scheme of things, right? If you just look at the general trend, this still does not look healthy at all. And that's in general what I think is important here. When we've got a bearish trend overall, I think it's better to take that overall macro trend seriously. It's better just to continue betting on falling prices and take days like this as an opportunity to find new entry opportunities, to potentially add to new short positions. When we are in a bull market, right? When the market in general tends to trend up, then we try to find buy opportunities. We try to find days where people take profit, where things crash down, where we then buy the bottoms, we buy the dips, then bet on the general macro continue to go up. When we are in a bear market though, and I think it's very much likely that we are in a bear market, right? We've already dropped close to 50% from the all-time high. If we think that we are overall still in a bear market, then I think it's best to just take this macro picture again, and instead of buying the dips in a bull market, we short the tops. And so days like this, where everything is going up, where we reach some tops in certain cryptocurrencies, are the best days to enter, right? It's the best days to enter the short positions, to again take the macro perspective, take the macro trend seriously. And that's personally what I do, right? I'm looking for new short opportunities. This clip is coming to an end, but the entire episode is available over here. Just click this to watch the video. Take your time. Yeah, just click here. Looking very much forward to seeing you on the other side. Cheers.